guys, welcome back to the channel. Today is September the 4th, it is Sunday, and we're going to talk about a topic, and that is about trading in the direction of the trend. However the market is trending, trading in the direction of the momentum of the market, okay? I've been trading the markets for over 10 years now. You guys know that I am a scalper. I primarily love scalping the markets each and every day, whether it's for a few ticks or several points, but I have a certain trading strategy that I use in trading, supply and demand, pretty much, okay? So let's go ahead and talk about, a trending market and, taking trades within the direction of a trending market, okay? Now, most of you know that sometimes I will take trades in the opposite direction, which is counter trend trading sometimes, but, there's a reason behind that, okay? There's a reason behind the madness sometimes where you see me not take a trade moving in the same direction as the market. So most of the time you want to be trading, markets making higher highs and higher lows, go along, and then it turns around, starts making, selling off, starts making lower lows and lower highs, you want to go short, right? Well, sometimes I don't do that. It just depends on the charts that I'm actually pairing up and actually looking at. But let's talk about and mark up here on the chart, a trended market in one way and then a trended market in another way. And then we'll look at some examples of, the strategy, using the trading strategies centered around supply and demand and how I actually trade it, okay? And using some tools or techniques to show you how you can actually, how I used to in the old days, mark up areas of my charts when the market was making, say, lower lows and lower highs, marking the highs of say, price moves down, pulls back, makes a high, moves down, pulls back. You can use a trend line, you can use a 20 SMA or, a simple moving average, whatever the case is, to kind of depict, as long as price is not breaking above a trend line area, as long as price is not breaking above an SMA area, whatever the case is, then you want to still continue staying in the same direction, and that's moving short or taking short entries. Vice versa, if the market is moving up, you're marking the lows as price is making, higher highs and higher lows moving up, mark a trend line, or you can use a 20 period moving average, simple moving average, whatever the case is, or EMA, whatever you want to use, you can use just simple 20 SMA, whatever the case is. Okay, so let me show you on the chart here an example here. And I've showed this before, and this is primarily centered around market structure, but showing you the trend of the market, okay? All right, so price making, basically higher highs and higher lows here, okay? Whoops. All right. So on each one of these movements, price makes a high, low, high, low, high, low. So the market is trending to the upside, okay? So each time it pushes up, you primarily want to be looking for a pullback, okay? To actually take a look for long entries. Same thing here, market moves up, look for the pullback to go long. Market moves up, look for the pullback to go long, okay? And at some period of time, the market will trend, and then there will be a pivoting point to where it will reverse in a sense, okay? And that could be a short-term reverse or a long-term reverse. It doesn't really, sometimes it can be just very short-term. Sometimes the market may just pull back deep, retrace, and then continue pushing higher. So, but here's the thing. Most people, or the traders in the old way I used to trade, was looking, primarily just kind of using trend lines, whatever the case is, meaning that, all right, if the market pushes higher, all right, pulls back, I could draw a trend line from, say, for instance, from this low here to the next low. As long as price doesn't break this area, you go long again, okay? But price moves up, breaks back, trend line here, goes here. As long as price doesn't break the trend line, you go long again, okay? All right, same thing. As price continues to make higher highs, pulls back, makes higher lows, you mark the trend lines from the low of the previous low to the next or the most current low. And as long as price doesn't break that low, you can go long again, okay? Now, let's say the market, churns and starts making lower lows and lower highs. It's broken structure right here, right? Pulls back, okay? And all it's doing is basically stair stepping to the downside. But here's the thing. At this point here, where price makes a low here, pulls back, makes a lower high, makes a lower low here, it's broke structure over here. So once it breaks structure, to me, it's a clear sign of the market wanting to move to the downside, okay? And this is where, you can start using a trend line. Mark the prior high, which is right here, and your most recent high, which price made, which is right here. Draw a trend line, okay? I'll use a trend line. As long as price doesn't break the trend line, it pulls back within the swing, and then it rejects, you go short, okay? Again, here's another, this right here would have been the prior high, okay? And then the current high right here, okay? draw your trend line, price pulls back. As long as it doesn't break the trend line to the upside, go short, okay? Because the market has changed sides, it's moving to the downside. The trend has changed to the downside. Momentum is now to the downside because prices broke structure and you're getting prices making lower lows and lower highs on the move to the downside, okay? So in essence, this is nothing more but falling price action. Falling market structure, understanding and being able to understand and read what the market is trying to do, looking at the painting or looking at market structure and understand the picture, pretty much, or the image that price has made, okay, has drawn out or laid out. So, but you want to be moving in the trend of the market, and I talk about that in a lot of my videos. You see me trading when I'm looking at my 60 range chart, which is my higher time frame chart. If, say, for instance, right here, the market is making these higher highs and higher lows to the upside, right? Each time that it pulls back, say, for instance, let's just look at this right here. Okay, this is off the higher time frame, and if I was, most of the time I say I want to take trades based on the direction of the 60 range chart for me, which is my higher time frame. Price pushed up here, pulled back, pushed up, pulled back. What is it doing? It's broke structure over here. It's made a high here. It's made a higher low, made a high, made a higher low. Okay, this was the prior low. This is the most current low. Okay, all right, on the pullback. Trend line right here, you can draw a trend line, price pulls back. As long as it doesn't break, say, structure right here or breaks below this trend line here, and you get the rejection, all right, go long. You can go long again, okay? So each time price does that, it does it again. It makes a new high, pulls back. Trend line goes here. As long as price don't break the trend line, go long. It does it again, breaks back, it pushes up, pulls back, draw a trend line. Continue the trend line going up with you, okay? Moving up with you. The prior low to the most current low. Doesn't break the trend line, go long. But at some point, price is probably going to meet some area of resistance, okay? And then the direction or the tide of the market is actually going to shift, meaning price then is going to start making lower lows and lower highs. And the moment it breaks structure to the downside and starts making those lower lows and lower highs, then you want to start doing the opposite. You start marking, from the prior high to the most current high, drawing a trend line. As long as price doesn't break that trend line, go short, okay? So let's look at some areas in the market where the market was actually trending, or the tide of the market actually changed, meaning the direction of the market changed, to where you can simply use trend lines if you choose to use trend lines, or a simple moving average, or any type of moving average, say a 20 SMA. I particularly don't use trend lines or moving averages in my style of trading. Not to say that it doesn't work, but this may be for someone who uses moving averages or chooses to use trend lines, whatever the case is. If you use those type tactics in your trading, nothing wrong with that. I see people trading that way each and every day. I trade pure price action, just simply looking for rejections off areas of supply and demand, and look for basically the pullbacks and look for the rejection. But let's go ahead and look at some areas of the market, because it appears that when using trend lines or moving averages, it primarily works when the momentum of the market is moving one way, whether it's moving to the upside or moving to the downside, okay? So we'll look at using both the trend lines and the moving averages in comparison to, when the market's actually momentum's changed, or momentum is moving in a certain direction, upside to the downside, or even when we see a shift in the market, meaning the tide's changed. So let's look at that now. So we can see, looks like coming from the 31st of maybe August, moving into September the 1st, so into two different trading sessions. What we see is the market has been trending to the downside, making lower lows and lower highs. So we'll take a look at, say for instance, the 1st of September, which I believe was last Thursday, or just most recent Thursday, or previous Thursday. It just passed. And what we see is the market is making these lower lows and lower highs, and then it pushes up, breaks above the moving average here, and then the tide turns again. So basically, this is no more than probably just a strong pullback for the market to start pushing lower here, right? Okay, so what we see on the change of the tide here, or change of the market, and the momentum now shifting to the downside, which means now we've already been trending to the downside. This is just a pullback for the trend to continue back to the downside, okay? All right, before reversing and moving back higher. So, as the market got ready to open, the session got ready to open on Thursday morning, okay, moving to the downside, we saw this pullback, right? Then price turns around, okay, starts breaking structure back down to the downside, okay? So it breaks structure back down to the downside. It made a low here, pulls back, makes a low here, turns around, starts pushing higher, okay? Deeper retracement pretty much. Price turns back around, starts breaking structure back to the downside. And you guys know that the ones that have been following the channel, the ones that have subscribed and following the channel for a while, I look for structure breaks. And structure breaks tell me pretty much, either it can be short term, it can be long term, but it pretty much tells me when I'm looking to take trades or looking for certain setups, whatever the case is. Structure breaks tell me that the market, the momentum of the market has actually has shifted. When I start to see the market break structure to the upside after it was making, moving lower, then all of a sudden it breaks higher and it starts breaking structure to the upside, that means to me that it could be a short-term or long-term movement or turn in the tide or direction of the market for a period of time before it may move back down or move back, whatever, however the market's moving, whatever the case is. But structure breaks are key in my strategy of trading. But so in this case here, I see price breaking structure back to the downside here. I mentioned this probably a deep retracement. Now, all right, so we're going to see if we can use our trend lines and moving average to kind of pair up to see if we can catch, directions and movements in the market or trades in the market, okay? And this is where the trading strategy is simply using supply and demand, maybe pairing up with trend lines again, or moving averages could all come together, and maybe increase your odds or probability of trading, okay, surrounding certain areas. Me, I'm a supply and demand style trader, and I want to, in this case here, moving with the direction of the market. This could be a deep retracement. Price continues to move lower. So I could be setting up, formulating a bias of I want to still try to take short entries, but I always talk about, tell you guys that I look for structure breaks or turns in the markets. Meaning tides in the markets actually changing when I see structure breaks, okay? In this case here, pullback, okay? Significant pullback, makes a low, lower high, low, lower high, lower, a low here, right? I look to my left side of my chart. What do I see? I see price breaking structure. After pulling back right here, it breaks structure back to the downside, okay? Now, here where the trend line and the moving average come into play and increasing your probability of getting into a trade to where you can make profits, right? All right, so let's draw a trend line, part one, step one, okay? We can draw a simple trend line if we choose to use a trend line, okay? And what I primarily want to do is that I want to see once price breaks structure, okay, where there are two areas of prior highs paired up that price may pull back to or use as a means of what I'm trying to say is drawing a trend line. So here's a lower high here, a lower high here, okay? So again, I'm trying to look to see if I can find two paired lower highs on the movement to the downside at the price broke structure to kind of use as a guide or a gauge once price pulls back. We're going to look for a pullback, okay? And see if price pulls back to that trend line without breaking that trend line to the upside or breaking through the moving average in the case. So I had the moving average, which is the red line here. Okay, this is a 20 SMA. All right, so it pushes down, pulls back, pushes down, pulls back, makes two lower highs here. So I can mark these two, high here and high here, connect them together. Price breaks lower, makes another low. Break structure, that's the key. Break structure to the left-hand side. When it pulls back, I'll look to see did it break above or through the SMA. No. Did it break through or the 20 period moving average here? Okay. No. That red line there represents the 20 SMA. All right. Did it break through the trend line? No, it did not. Okay. I'm just drawing that arrow here to the upside as a reference. Okay. So here's the pullback. It did not break the 20 SMA. It did not break through the trend line. All right. Candle closes red to the downside. You can go short. Okay. Catch the short on a move to the downside. You get it in probably around 32.5. Take it back down to the lows. This area here, okay? This area here, and let's see what I say. 32 and or 32.5. Bring it back on down to here 28. You picked up, a few points there. It could be 3 points, 3.5, maybe even 4 points here. So you take it from here on the pullback, back down to the prior low, and try to move it. Try to catch the trade continuing to the next level is what I'm trying to say. As price pulled back here, getting a short, take it back down to the next level here, okay? So, again, this is nothing more than see price making lower lows, lower highs. The trend is to the downside. Momentum is moving down, okay? All right, we want to trade in the direction of the momentum, okay? Price is pulling back, deeper retracement, okay? Changes tide. Changing tide means for me, got to see if price is going to start breaking structure. It does. It starts making lower lows and lower highs to the downside. It breaks structure here. The moment it makes two lower highs right here, I'm going to connect the trend line. Then I want to see if price is going to break that area of structure here to the left or break some area of structure. It does. It pushes lower. Okay. It makes a low. The moment it pulls back, I've already drawn my trend line from two prior highs. Okay. Just two prior highs. Okay. All right. So 1, 2, pulls back, doesn't break through the trend line, doesn't break the 20 SMA or the moving average here, in this case here, go short, okay? Take the short back down to the low and then see if you can trail behind it, price, whatever the case is. If you got 2 contracts or you're letting the first contract run, whatever the case is, wherever your TP's at, your target profit target set, try to take it down to the next level, whatever the case is, okay? You're golden. And if you're using the volume profile, where are you at? You're at the upper end of the high volume area here. So everything comes together, okay? It didn't break the trend line. It didn't break the moving average. It's above the high volume area here. Always talk about sell the highs and buy the lows. You're selling the highs right here. Price likes to move from the outer edge of a high volume area to the mean back down to, which is mean the mid portion of a high volume area, okay? So everything comes together in that instance there, okay? And this is simply showing you how to kind of trade with the trend, the direction of the market. Even though this is a deeper pullback here, the market continue pushing lower, all right? And another thing to take a look at too is I'm a supply and demand style trader. So again, everything came together here, all right? It pulls back. Where did it come back up to? It pretty much, let's see here. This would be my area of, let's say supply right here. I'm gonna draw it right here, okay? Now, we're only a few ticks away from it tapping. Let's see, 1, 2 ticks. I'm gonna count that, guys. I'm gonna take that trade. I'm gonna consider that definitely as being a high probability entry to take. For 1, if I'm using trend lines. 2, if I'm using the moving averages. 3, look at the volume profile area. And then 4, we've got supply sitting right here. To me, it's a no-brainer. All right, it's a no-brainer. Okay, so here's another prime example I'm gonna show you. Where market's moving in it's trending in a certain direction, momentum moving to the upside now. So we got a change in the tide of the market, okay? So the tide has changed, the market momentum is moving to the upside, trend is moving to the upside. So what do we see? We see higher highs and higher lows, okay? All right? So the market is moving up, okay? Pulling back, moving up, pulling back, moving up, pulling back. So it's making lower lows and lower highs, all right? So as the market continues to do that to the upside here, all right? Moving up, okay? We've got a high here, lower high, lower high. If you draw a trend line, okay, say right here, okay, from this low, this low to this low, okay, market pushes higher, makes a higher high. As price is doing that, what is it doing? It's staying above the moving average right here, okay? It pulls back. It never breaks below the moving average, right? The trend line. It never breaks the moving average, okay? Price closes green candle to the upside, take it back up to the previous high right here, okay? So price is on the pullback, okay? It's pulling back where though? Okay, in this case here, it's pulling back primarily to almost a place of resistance right here. Now me, I'm applying in a demand style trader, so I primarily wouldn't be taking, trades like this because I primarily don't trade support and resistance, okay? But if you are a support and resistance style trader, you trade off of support and resistance, and you're looking at these things, you see, okay, I draw a trend line from this low to this low here, taking it out. Price is moving up, staying above on this pullback here, above the moving average. It's clearly not breaking in any kind of way the trend line here. And we're at kind of the lower portion of this. We're at the lower portion of this low volume area here on this pullback, butting up maybe a tick or two away from resistance. It rejects green candle, go long back up to the highs up here, okay? So that's another entry of, following the trend, trading in the same direction as the trend, and looking to take, get into an entry where you could be scalping the market, where you could scalp the market for a few points, okay? Now we're not, in some instances, when we're following the trend sometimes, depending on the time frame, the chart, it could be for a quick scalp, guys, when you're using your trading strategy. So just be mindful of that, okay? Because most times we want to take the trade on the pullback, as long as it's not breaking the trend line or breaking the moving average, and we're moving in the direction of the market back up to an area of either support, in this case here, resistance, or back down to an area of support. Now let's look at one more example here, and then this is going to be it for this video here. But okay, so now we see, the market was moving to the upside. What do we see now? We see a shift in, or the direction, shift in the momentum. The tide is changing in the market. Okay, so now we are up here. We made a high here, and price starts doing what? It starts breaking structure to the downside. Okay, price pushed up here, made a high, higher low, higher high, pushes down, breaks structure here, pulls back. It's breaking more structure as it moves to the downside, breaking structure over here. So it's taking out, swings, taking out levels, it's taking out structure to the left-hand side as it's moving lower, as it's making lower lows and lower highs to the downside, okay? All right, so this is where we could, start looking for areas to actually, draw a trend line, from two paired up highs, whatever the case is, and looking at the moving average and using the volume profile to see where price is at. So if price set that, pulls back to the upper portion of the high volume area, we're going to be looking for confirmation to go short as well. All right, so as price is moving here to the downside and breaking structure, structure to the left hand side, making structure means making lower lows and lower highs. All right, you can pretty much just draw a trend line because you can see price clearly staying below below the moving average here. Okay, high here. So you can, you just kind of follow suit and draw the trend line to the downside. But here's a nice area I'll show you where price made a low here, pull back, made a lower high, pull back, made a low, pull back, made a lower high. So what I'm looking at is when price pulled back right here. Okay, let's just draw a trend line like I said. Okay, because price is making these lower lows and lower highs to the downside. Okay, here's a high, here's a high. But we can pretty much do it like this, connect the highs together in a sense, trend lines to the downside, okay? All right, so let's do this. Let's just use the two recent highs or lower highs on the down when price moves to the downside, okay? So lower high, low here, lower high, price pushes down, makes a low here, pulls back, okay? Now does it break above the trend line some? Yes, it does. It does break the trend line to the upside just a little bit. Does it break the moving average a little bit? Yes, it does, back to the upside. But if you look at the volume profile as well, okay, we'll take a look at that here. Give me 1 second, guys. My computer kind of froze up a little bit. All right, I see over here a high volume area. Price pulls back. It's at the upper edge of the high volume area. I'm looking to take when I see price, I'm always talking about, like I say, selling the highs. Price is at the upper edge of it, okay? Now, it did push through a little bit, but it turns back around, okay? All right, it breaks back through the moving average to the downside, okay? But this pullback here, price is always not going to do, or, when you're looking for a strategy to trade based upon in a trending environment and momentum, say for instance, to the downside or moving to the upside, it's always not going to do exactly to the tick or to the T what you're looking for. It may break that moving average a little bit. It may break that trend line or whatever the case is. But the thing about it is, as long as it's not breaking structure back to the upside or break it, and also breaking structure means, it's breaking structure to the upside and breaking solidly through a trend line with it, moving in an opposite direction, whatever the case is. So like in this instance right here, meaning pushing up, pulling back, and then breaking structure, taking out structure over here, then we can still follow suit, still follow suit and looking for an entry to go short. Why? It did break a little bit. It did break the trend line a little bit. It did break the moving average a little bit. But what is it doing? It's pulling back to an area of supply in this instance here. So I'll wait to see if I'll get the rejection. And this is why I trade supply and demand. And me by preference, I don't trade trend lines or trade moving based on moving averages. Even though moving averages, a lot of people trade it because it helps them stay in the direction of a trend, in the direction of the overall momentum of the market. It's a great thing to trade. Yeah, you can add it to your charts. Like I said, I used to trade trend lines. I used to trade and have moving averages in my chart, but I should be just trade primarily on price action. I'm interested in what price is doing, okay? And that's my focus now. My mind is trained to just look at price action movement, okay? Not looking at anything else, because I believe in trading what's most simplistic by taking everything off of my charts, and I like to see my charts just look cleaner. It look cleaner that way, okay? So this here is an area of supply. I'm interested, okay? It pulls back above the high volume area, okay? Yes, it does break through the moving average a little bit and break through the trend line, but the moment it rejects, closes back below the trend line, the moving average starts to break. It's like I said, it's above the high volume area here. I'm interested, looking for a short. Okay, closes to red to the downside. You can even look at your 4 range to see if you're getting that rejection with the 4 range chart. For me, it's a period chart that I would use in trading with a 12 range chart. If I see the rejection, I'm going short back down to the lows and trying to take it on back down to the next area of support below us, which in this instance here would be primarily probably this area of support right here, and where we have support sitting right here as well. Okay, I'm looking to the left hand side of the chart. So you get in primarily around, let's see, let's blow this up again. You can get in right here at the close of 68.5, whatever the case is, and just take it back on down to the lows down here, 63, 64, and then try to also see if you can trail it, trail behind price and catch it and continue taking it back down to the next area of support, which would be around 56 or 57. Okay, so that's how you can trade, following the trend, how you trade, looking at momentum and making sure you are trading it in the direction of how the market is trending. That's why I always use a higher time frame and looking for it. I'm a supply and demand style trader, but I love taking scalping opportunities in the market. When prices add an area of supply and demand, I'm looking to start scalping. But I also want to be taking my trades primarily in the direction of what's going on the 60 range chart. So for instance, if 60 range being my higher time frame chart, if I see price making higher highs, breaking through structure, pulling back to an area demand, or area demand, if it's moving higher and pulling back, an area demand on the 60 range, then I'm looking for rejection to go long. If price is broke through, say for instance, or broke through an area of structure coming to the downside and pulls back to an area of supply, I'm looking to go short. Okay, so I want to follow the overall trend. I want to be in the direction within the momentum of the actual market. Okay, so that's all I have for you guys today. I hope you guys appreciate the video. Hope you found value in the content. Please make sure to drop a like on the video if you do not mind. Please drop a like. I appreciate it. If you are a first-time viewer, please hit that red button, that subscribe button, and also that little bell icon next to the subscribe button, so that you never miss one of the uploads. And I will see you guys on tomorrow's day, holidays, Labor Day. So the markets will be closed, and we'll start to rock and roll again next Tuesday. Okay. All right. Take care.